Some transactions receive special tax treatment when selling farm business assets, from unharvested crops sold with the land to gains arising from the sale. It's important to know the potential tax benefits. Roger McEowen with the Washburn School of Law joins us now with some guidance in today's Rural Money segment. Roger, so glad you're with us today. Now, what are the basics when it comes to the treatment of Section 1231 assets?
Well, hi, Tammy. Good to be with you today. And this is a very favorable tax provision that farmers and ranchers can take advantage of with respect to a lot of their assets and even livestock. But basically, if you've got a 1231 asset, and we'll define that in just a second, your gains are taxed favorably at capital gain rates, and your losses are treated as ordinary losses, which makes them fully deductible. So it's a bonus on the plus side as well as on the downside.
And what exactly is Section 1231 property?
Yeah, that's the key. It has to be property that is used in the taxpayer's trade or business. So you cannot hold 1231 assets for sale to customers. So it has to be property that you're actually using in your farming business, subject to depreciation, and generally held more than for 1 year, although there's a special rule for cattle and horses and other livestock. They have to be held for maybe a longer period of time.
So how does one go about determining use?
Yeah, that's the key. If it has to be used in your taxpayer's trade or business, you're going to have to prove that. And basically, it comes down to the facts. It's based on the facts. And so, for example, if we want to apply that with respect to animals, any animal that's held for ultimate sale to customers in the ordinary course of business can still be deemed to be draft, dairy, or breeding purpose as the reason for holding that asset, and that would qualify. But we can get into a whole bunch of cases and IRS rulings that really show that there's a fine line between using a farm asset or an animal in your farming business and either having it as sale, holding it for sale to customers or as inventory, and those last 2 points won't count. One of the things, for example, you have to watch out for is a cold cow sale, that spring sale. It might lead to 1231 gain or loss, but it might not, depending on the facts.
So what would you say is the big takeaway here?
Well, the big takeaway, I think, is to understand that there is this possible very favorable tax treatment if you have what's known as a Section 1231 asset, but also know that you have to jump through a bunch of hoops and meet requirements to get that tax treatment. So again, it's one of these situations where it's essential to have good tax counsel at your side.
Definitely good information. Roger McEowen with the Washburn School of Law. Appreciate your time today.